Hello everybody, welcome to my YouTube channel. I want to first of all thank everyone who did their due diligence to subscribe to the YouTube channel. We are getting all the love that we can get, and for the enormous likes on the video, it actually tells us that you're getting value from the things that you are studying with us. So this is us continuing our lower time frame scalp model using smart money, and as we all know, this will be a trade breakdown as to how we took the trade and how the trade would have gone in our favor. So shout out to the 418 subscribers that we have as at the time of this recording. So do also, show us your support by subscribing, turn on the notification bell, like the video, comment what you think was interesting also. And that's pretty much all the support we can get. So back to business. Lower time frame scalps or lower time frame intraday scalp model. So yes, we have this assumption, or not pretty much assumption, but a theory that when price is giving us a continuous move to the upside in this manner on any time frame, but in this case we're going to look at it particularly on the lower time frame. When price does this, what is very imperative is our ability to follow through price action and see where price has yet mitigated, or where price is trying to mitigate, or where price has mitigated or is violating. So in this case, for our intraday model, we will pretty much be looking at price being violated. Say we have a clear healthy bullish order flow such that we have this break of structure here. Let's take it a bit higher. Okay, we have that. We have this one here too, and now we have this. So if you look closely, let's just assume that all the OBs have been properly mitigated so far. Now we have this one left. Now this is where the intraday scalp model setup comes in. This is what we should be looking out for. Let me just bring this a little lower. Yeah, so what we'll be looking out for is a violation of this OB after price has taken out the high apparently. So this is what we need to see. Price giving us the intention to want to go lower, but first just taking out liquidity from the previous high and breaking the previous low, hence giving us bearish intent, not confirmed bearish order flow, but bearish intent. So seeing that this order block now has been violated, what we need to do is look out for sell scalp models, or pretty much look out for sell structures. What do we mean? What we mean is we should expect to see price mitigate the order block that led to the first bearish movement or depending on the models, like entry models, whether it is the inducement or mitigation model. I think we may have talked about it in our previous videos, so you should do well to go check. You will be able to see the difference. So let's say price gives us this and mitigates. We'll be looking forward to the second breaker structure because that's how we place our entry. So the second breaker structure will be pretty much the criteria for choosing an entry. So this would have been our POI, and after looking for our usual confirmations, after looking for our usual confirmations, we should have our sell entry imminent. So unfortunately I may not be able to go over what this is what we'll be looking out for. Unfortunately I may not be able to go over what we look out for entry, but I had given you guys a clue in the previous video, the more reason why you should check it out anyway. So I'll leave the link on the description of this video, the link to the previous video on the description of this video, so that you can have access to the video that we are referring to. So yeah, this is pretty much what we're looking for, and the same goes for the buy models. This is for the sell model, so the same goes for the buy model. Let's quickly look at AUDUSD, where something of that nature occur. And yes, this is something you should all take to heart. We are not looking for these reactions everywhere on the chart. We're just looking for it during the London session, the overlap between London and New York session, and New York session. So that's pretty much the premise to which we'll be looking for these setups. Alright, so let's get to it right about now. Now on AUDUSD, let me turn on the sessions indicator. On AUDUSD, this is the London session, and price was regressively giving us bearish healthy order flows. Now on the 3 minutes was where I noticed a change. On the 3 minutes during the overlap between London and New York, we noticed that price took liquidity from the previous low here. You can see price taking the liquidity from the previous low, and when it did that, this was the order block next that needed to have been violated, because obviously this order block here was not what do I call it, the order block here was not mitigated. So it means this one here will become an inducement. Alright, so price does this thing, taps, violates this order block, taps into this one, and begins to regressively go downward. But now I have taken note of the fact that I already have 2 breaks of structure. This is the first, that is the second. We'll actually take our time one day to go over how I look at break of structure, the systematic approach to which I look for break of structures with the help of order blocks, because break of structures is what forms our trading ranges, and break of structure is what forms our directional bias. But since that is a crucial matter, we actually have to pay so much attention to what we would refer to as break of structures, because if our ideology of break of structure is wrong, then it will pretty much affect every other thing, because our entries are based off of break of structure, our directional bias are based off of break of structure, our trading ranges, they're all based off of break of structure. So invalidation points, every of those things, they're based off of breaker structures. That's why it's like a crucial part. Structure is a crucial part of the strategy or the trading concept that we teach. So yes, we have this double breaker structure, price, mitigating this will be here. Now, for us to really be sure that price wants to go higher, we cannot, again, I repeat, we cannot be doing this, cannot be found doing this such that we just place our entry there like that. No, we can't be found doing that, because that's not enough confirmation that price wants to go high. Because if you did that, you would have lost so much before eventually coming to capture this. You would have lost this trade here, because obviously this would have been your first break, your second break, and so you would have chosen your entry off of this. And what happens? You probably get, because you'll be looking to target the highs there. What happens? You probably get taken out, probably at break even, if you know how to manage your trade. But that's not how we do it here. We ensure that we have enough reason to go higher. So what is that reason? I give it to you guys again for free, absolutely free. When price comes into your POI like it does in this case, you have to go to the lower time frame to find double breaker structures to confirm your entry. And that's what we're about to do. All this is happening on the overlap between New York and London, or London and New York. What do we see happening? Price breaks the previous high. This is the previous high, because this high led to this last low that obviously forms here, and this our order block is efficient because it takes out the liquidity from this low here before pricing higher. So this is a high probability order block. So, but that's just the first breaker structure. What happens to the second breaker structure? How do we get it? So far that is the next high. What happens? Price gives us the second breaker structure but did not mitigate the first OB that caused the first breaker structure. This is an example of what we refer to as the inducement model, such that the second OB that led to the break of structure, that led to the second break of structure, which happens to be this, becomes the inducement model, or becomes the inducement order block, meaning price will have to violate the second OB to come tap the first OB. Alright, that's exactly what happened here in this case. We had several OBs to the downside, but price violated all just to come tap the ones that rested here. So that's exactly what we're looking out for. So we are expecting a violation there. Let me just see if I could write that. Expecting violation, expecting that low to be violated. So expecting violation so that price can come right into this POI. Automatically it is no longer a POI, it becomes our entry. This is where we are looking forward to an entry, because price has given us the bullish intent, two break of structures on the higher time frame, which is the 3 minutes in this case, and now price taps into our POI and gives us the double break of structure. That's our criteria being met. So apparently you would have our entries here. Stop loss a little lower, 2.5 pips. Yeah, let me take this here. Good. And yeah, that's it. We get triggered. Obviously, those of you that know about the refinement models, if you had refined your POI to your entry to the week, you would have gotten in at a pretty much efficient pricing. But the issue with over refinement is you could miss a trade, and I do not like how that can mess with my psychology. So the best thing is to keep it as average as possible. That's what we just did here. So now the first fundamental part has been taken care of, which is entry, of course. Now the next crucial part is how do you manage this trade. Of course, these are equal highs, so we will be expecting price to definitely take liquidity out of them. So yeah, we have equal highs there. All of these are areas where liquidity is resting. So we are looking for price to take all of that, so this becomes the next target. We have equal highs likewise here too. All of these are liquidities that have been built over. We also have equal highs here too. So automatically these points becomes the points where we will look to target, because remember these are like lower time frame setups, so we are pretty much looking at areas that have liquidities that we may need to check out. So the last set of liquidity that we see here are the trend lines liquidity. Okay, this high takes that. So we have the trend line liquidities here. So liquidity, of course, is resting there, meaning our target, we should be looking at our target around that point. But more so, that should be where our target should be primarily. But also, we have to consider the fact that when we see bearish breaker structures to the downside, double breaker structure, and price healthy, giving us healthy mitigations or healthy order flows for that, we should know that it is about time to exit the trade. So let's go to the 3 minutes. And let's see if we'll have our entries, our TP hits. Yep, we had our entry hit at that point. I think that's like the highest point here. Good. So apparently you can see that we had our TP hit, and right after that I'm sure price began to give us lower pricing. So even if our TP was not hit and we had this lower pricing going on, let me just quickly zoom in. We had this lower pricing going on and held the mitigation. There was a lower pricing going on here, but the mitigation was not held. The price just comes, taps it, and violates it. So but here we have healthy mitigations such that this is the low. There's another breaker structure around there because of the exhaustion points, and price just healthily mitigated this and gave us another break again. You see, price is continuing to regressively go lower. So at that point you'd have taken your trade, you have gone off your trade maybe at the breaking of this lower. So at the close of this candle you'd have taken your exit out of the trade apparently. So this is exactly how we look at intraday scalp models, and these setups work all the time. Now I couldn't see the setup available in GU, NU and EU, but of course it expressed itself in AU. So from time to time, because these are like the only pairs that I trade, so from time to time, try as much as you can to compare um, these four currency pairs, and you definitely see something that fits your style of trading. Don't give up when things do not tally alongside tally alongside your trade setups or your trade criteria. Learn to stick to the rules, because that's where the discipline in trading comes in. Your ability to stop when there is nothing showing you itself on the chart, and the ability to go forward when the chart presents you an opportunity. So I hope you find this video very insightful. Do well to like this video, do well to comment how you have received clarity so far from what we have been talking about here. And don't forget to subscribe to the YouTube channel, turn on the notification bell so that you will be always notified when we drop new contents. Until then, I wish you all good luck and good trading. Bye everyone.